Since the beginning of 2020, Singapore has been impacted by the pandemic. If you ask anyone on the streets, people will probably say that there is a recession ongoing, with news of big companies bailing up and Singapore's GDP performance at its worst in history, and our unemployment rate at a record high. So in this current worst recession that we are facing right now, are land prices in Singapore finally falling? And are property developers shunning away from property development? One of the signals for prices is in land costs. Since land costs make up the bulk of any property development works, it makes sense for us to track how much the property developers are bidding at. We're going to look at land sold after the pandemic has begun and compare it against land that was sold before 2020. Since 2020 to the first half of 2021, the state has been releasing land at a calibrated rate to prevent oversupply and to indirectly control prices. Out of these 10 confirmed sites that were released since the pandemic began, 3 of them are for executive condominiums to be launched by HDB. Now the remaining 7 are launched by URA for private condominiums. Out of these 7 sites, 3 has since been sold, and the rest are now pending closure or pending launch before July this year.
The first confirmed site closed during the pandemic was in November 2020 for a prime site in Tanah Merah Link, fronting the Tanah Merah MRT station. The tender was since awarded to MCC Land with a top bid of $330 per square feet. This site is zoned residential with commercial on first story. Hence, you will find commercial spaces on the first story and approximately 265 residential units on the upper floors. This site was subjected to aggressive competition, attracting up to 15 bids, with the top bid just 4.6% above the second highest bidder. Based on the past land bid prices in the vicinity, the land prices in the area has definitely risen. This bid of $930 per square feet seems to be a bullish one, representing a 22% increase in land prices from the last government land sale in the area. With this newly set record in the area, it will likely translate to a launch price between $1,600 to $1,700 per square feet. With an estimated launch price of $1,700 per square feet for this Tanah Merah site, it would mean a new record high in the vicinity, representing an 11% increase from the last show flat sales. This site is expected to be launched by first quarter 2022, amidst a recovering market. Both land prices and launch prices have risen over the years, in tandem with an average yearly inflation of 2 to 3%. But it is worthwhile to note that the rate of increase of land price has risen a lot quicker than launch price. This is perhaps unsurprising in land-scarce Singapore, and an increase in competition in the property development business. This means that it is likely developers today is expecting to make less profit. Alternatively, developers may price their launches more aggressively when the market recovers to make up for the increase in land price. The first residential government land sales site for 2021 is a plum site in the Farrer Park area. This is the second tender to close since the pandemic began. With pent-up demand from land-hungry developers, this site saw 10 bids, with CDL joint venture with MCL Land emerging as the top bidder, with a top bid of $1,100 per square feet. This is only 5.7% higher than the second highest bid. This once again shows that the top bid is not just an one-off aggressive extreme bidding by one developer, but rather reflecting a general market sentiment shared by major market players. This Farrer Park site is located in the rest of Core Central region, which essentially means the city fringe. Similarly, land prices have risen through the years, a bit more aggressively in the past and seems to have caught up in more recent years. Since the last land bid for Uptown at Faro, land prices has risen 13%, also somehow hedging inflation. The launch price of the city fringe land is expected to be around $2,100 per square feet range when it is launched in 2022. This represents only a 10% increase compared to Uptown at Faro. If this is the case, a 10% price increase over 3 to 4 years seems to be muted. This city fringe land received good interest from developers, attracting 10 bids in total. It is no doubt a prime piece of land, being very close to the city, and when it is launched later, it will be more expensive than past launches. However, it is worthwhile to note that the growth potential in this area will likely be calibrated for a while, signaled by the less aggressive biddings. The second site that was concluded in first half 2021 is a highly sought-after site at Ang Mo Kio Avenue 1. This prime site attracted a total of 15 bids. United Venture Development submitted a top bid of $1,118 per square feet per plot ratio. United Venture Development is a JV between UOL Group, Singapore Land Group, and King Leong. It is worthwhile to note that the top bid was merely 6.3% higher than the second highest bidder, put up by City Development and MCL Land. This site will be developed into a 370-unit development, with some units being able to enjoy unblocked views towards the Bishan Ang Mo Kio Park and Lower Pierce Reservoir. The last sites sold in the area were between 2012 to 2014, averaging about $750 per square feet. Comparing with the latest Ang Mo Kio site bid, it represented about a 34% increase. It is worthwhile to note that this increase is more than the collective inflation rates over the years. Adding in the relevant development cost and expected profit margins, the launch price is expected to be in the region of $2,000 to $2,100 per square feet. Prices are unlikely to be lower than $2,000 per square feet, unless the developer is willing to further reduce their profit margins, which is notably already lesser. With the aggressive bidding of land and looking at the increase in land prices in this area, it is inevitable that the price of this Ang Mo Kio launch will be higher. It is notable that the increase in launch prices is lesser than the increase in land price. This would signal that the profit margins for developers are likely to be squeezed further. Coming up next is a prime site located in Jalan Bukit. This is expected to close in June 2021. This site is released as part of the rejuvenation plans to the Beauty World area. This site is zoned commercial with residential. Hence, we can expect an integrated development with seamless connectivity to the Beauty World MRT station and surrounding amenities. We are expecting a lot of excitement and potential in this site, with a lot of interest from developers, and bidding are expected to be aggressive in order to win this site. The next site we should look out for will be the Lendor Central site, now open for tender. This site is zoned residential with commercial on first story. We can also expect a lot of interest and potential in this site, as it is located right next to the upcoming Lendor MRT station. This tender will be concluded in third quarter of 2021.
By comparing land prices before 2020, we can now certainly say that land prices have indeed not fallen, and hence it is unlikely that future launch prices will be lower as well. Despite the ongoing pandemic and the general weak economic health immediately, market players remained confident in the Singapore property market and the general recovery of the economy in the longer term. It is worthwhile to note that land prices do not behave in the same way in all areas. Land bids tend to be aggressive in areas that has pent-up demand and are earmarked with national building plans. How does that affect you as buyer? Now, in our next episode, we will be looking at how we can possibly forecast future launch prices based on land price. See you in the next episode.